Hello, I'm David Chaston at 98.9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news the big Aussie banks are warning of the risks of regulatory overreach. But first, this report is published ahead of the US Fed rate review. No change is expected, but one is in December, and today's one will set the scene for that. We will update this item in the news item below when the results are known. Canadian housing starts fell 5% in October as groundbreaking on multiple unit urban homes climbed 17%, but were more than offset by a bigger drop in single detached urban starts. In Mexico, they are reporting a dip in their inflation rate below 5% in October from September. A year ago, that inflation rate was 6.4%. Another month, another strong Chinese export performance, another round of claims this is only because American importers are trying to beat tariffs. The problem is, those tariffs became effective on September 24th, and this data is for October. China's exports surged again last month, up more than 15% year on year, and the largest gain of 2018 on the back of resilient demand, defying many economists' expectations for a slowdown from the trade fight with the United States. Additional American tariffs kick in at the start of 2019. Things aren't so good in Germany, however, with their trade balance slipping on a dip in exports, slightly more than expected. The data released overnight was for September. In fact, the EU says their whole economy is cooling in 2019 in coming years as global demand for the bloc's exports wanes, with a sharper slowdown possible if the American economy overheats or trade tussles escalate. And ECB President Mario Draghi urged Eurozone governments to pay down their national debt to build resilience against potential economic shocks, such as the looming Brexit. And overnight, the Swiss reviewed their official interest rate settings and, like the RBNZ, indicated its level isn't going anywhere soon. In Australia, the Big Four banks have launched a strong defence of vertical integration, lending benchmarks and executive bonuses in their response to the Hayne Royal Commission interim report. You can read their arguments in the links below. Basically, they are saying making it harder for consumers to get loans from banks will push those consumers into unregulated shadow banks and make the issues much worse. The US Treasury 10-year yield is firmer at 3.22%. Their two-turn curve is now just on 27 basis points. The Aussie government 10-year is at 2.77%. That's up 4 basis points. The Chinese government 10-year is at 3.51 and down 1 basis point, while the New Zealand government 10-year is now at 2.81%, and that's up 4 basis points too. And gold is down $5 overnight to $1,223 an ounce. US oil prices have fallen sharply today by more than $1 a barrel to under $61 a barrel, while the Brent benchmark is now just under $71 a barrel. These are 7-month lows and should start showing up soon at the pump. When crude oil was last this low, we were paying $2.13 a litre at the pump discounted. But of course, in Auckland, 11.5-cent new tax has been imposed since then. In fact, the drop in crude oil prices is more than 20%, so this commodity is now in a bear market. The Kiwi dollar is starting today at its new higher level of 67.8 US cents. On the cross rates, we're at 93.1 Aussie cents and 59.4 Euro cents. That leaves the TWI at 72.1 where it was at this time yesterday. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.